Good evening, ladies and gentlemen. Welcome to the Maritime Knowledge Lecture Series started by the Center for Maritime Economy and Connectivity at RIS in collaboration with the India Habitat Center. This is a very important aspect of our growth story and India's Maritime Amritkal vision, which gives us a comprehensive roadmap for the India's maritime sector transformation over the next 2 decades or so. It builds on our previous vision, Maritime India Vision 2030, and we have the Maritime Amritkal Vision 2047, which focuses on enhancing port capacities, promoting coastal and inland waterways, and developing sustainable maritime transport ecosystem. But more to sustain all this, all these assets, a very important aspect of risk management is there. So today we are discussing the topic or the subject of the role of protection and indemnity in shipping. So P&I Club covers for legal liability, and it's crucial to the survival and growth of the maritime industry. It's a very important aspect globally, and nations have their own P&I clubs. They provide essential services to the ship owners, also to the cargo, also for hull, all sorts of risk for safety, and all these aspects of claim mitigation and loss prevention initiatives require a lot of technical expertise. So there's a great domain for capacity building also in this area, where we have a lot of jobs lined up, not only now but as India grows in the maritime sector. So especially the jobs, technical jobs and non-technical jobs also, in this operational jobs in this area, as legal experts, as underwriters, as claim professionals, so on and so forth. So for the young generation, it's very important to understand this domain properly, and that's the main focus of this Maritime Knowledge Lecture Series. That's how the name has been coined. So we have today with us two very senior and experts from this industry. The chair for this session today is Mr. Sanjeev Singh. He's currently the Director Marine at Premium Insurance Brokers Limited, Hong Kong, but he possesses 4 decades of experience in this field. So he's been a senior executive and the head of Maritime Department in the New India Assurance Company Limited, which is India's largest company handling marine cargo, hull and energy insurance portfolio. And he was the head from 2009 to 2018, a very long and distinguished career he had. Besides that, he also represented India at the International Union of Marine Insurance, IUMI, Hamburg-based organization, and he represented India for very long years. And in fact, he was the chairperson for the Education Forum, and he was a part of the Facts and Figures Committee and the Cargo Committee. So, which is a great distinction to his career. So, we are very honored and pleased to have you here, sir. Along with him, we have the lead speaker, Mr. George Jacob. He serves currently as the Executive Director of James McIntosh and Company Private Limited, a very well-known known company in this field. He also has a legal background. So he's not only a professional, but he's also a legal expert, where he began his career working for various shipping agents before joining James McIntosh in 1994. So he's been with that company for so long. Additionally, he holds the position of non-executive director for other companies within the James McIntosh Group, and he's also a member of the managing committee of the Indian Maritime Law Association. Why law? Law and risk, they go hand in hand, and Mr. George will be explaining you all the nuances in all this. So without any further delay, I would request Mr. George Jacob to kindly make his presentation and speak to the audience. Thank you.
Thank you, Dr. Shratriya, for the kind words. It's indeed a privilege to attend a meeting chaired by Dr. Sanjeev Singh, decades of experience, and the brief conversation that I've had with him is very illuminating. It's a privilege, sir. Thank you very much. I'm thrilled to actually see several young people here, and that just shows that there is a lot of interest in scholastic pursuits and also the practical aspects. It's a really positive sign, and I think that it's very good for Indian shipping. Before I start, I would like to just speak a few words about the company that I am in. As Dr. Shratriya said, I've done 30 years in this company since 1994. But the company was actually established way back in 1854. So a very long time back. And we had a footprints as P&I correspondents and as ship agents with offices primarily those days in Mumbai. But now we have a spread of offices on the East Coast and on the West Coast of India, headquartered out of Mumbai. One of the plus points that we hear about when we travel abroad is the 24/7 service that we give, literally, and the continuity of services that we've been able to give. At present, James Mackintosh is actually run by the Commissariat family. It came into the family possession, I think, sometime in the 1960s. And now it's a fourth generation of the family who is running it. And they've done an excellent job in encouraging talent, nurturing talent, and keeping the company going in a very wonderful way. One of the biggest kudos that we get when we go abroad is that you have a company which keeps going. And I think that's very important from the point of view of policy, from the point of view of stability and certainty. So those are the things that are very critical for any business, and I would say even for any country's policy. We have experienced people, experienced not only in the commercial world, but also in operations. So we have a huge emphasis on operational background. I come from an agency background before I joined James Mackintosh. Mr. Raman, who is our right-hand man sitting in the front, actually was sailing for some time before he joined us. He's been in the company slightly longer than me, I think. So that's the way we have structured the company. We have practically zero attrition rate. We take a long time to recruit, but as I said, this is a business which requires continuity, and therefore we want to see people who come in, stay with us, grow with us, and grow the business. More details you can look at in www.jamesmackintosh.com. So with these words, I would like to start off with today's session. It's quite exciting to actually hear about RIS and CMEC. And I did not know that this was an initiative started way back by Dr. Manmohan Singh. That's what you mentioned, during his times at least.
Yeah, so RIS is a 40-plus-year-old think tank.
Yeah.
And as illustrious as Dr. Manmohan Singh have been the chairperson of this organization.
Yes, so we have a very rich legacy, and probably you can see that in this mixed crowd that is here. So this is a very specialized subject, P&I, protection and indemnity, and I'll try to see whether we can do some justice in this short time that we have. Just to bring some perspective, the United Nations Conference for Trade and Development, in their 2023 report, projected a modest 2% growth in maritime trade between 2024 and 2028. I suspect that in view of the new global scenario, it may even probably come down a little. But it's also highlighted by other sources like the Global Trade Outlook published by the UK government that global trade is predicted to increase to USD 100 trillion from the current USD 32 trillion by the year 2050. That growth is not just, it's real growth. So there might be some which is you can give it to inflation, but there's going to be real growth. So the shipping sector is seen as a major midstream component for international trade. If you look at the globe, nations like China are now nudging nearly 20% of the world shipping tonnage. And nearer home, after I got in touch with Dr. Shrotriya, it's heartening to note that we have embraced the opportunity and challenges with specific plans. So I went through the Maritime Amritkal Vision 2047, long-term vision, 2050, you're looking at, kind of tripling. Comprehensive roadmap for the Indian maritime sector's transformation that is there. It's good to see that you have a short-term vision, which is the Maritime Vision 2030. So we have all the planning in place, which is something which is very, very positive. P&A Club cover for legal liability has become crucial to the survival and growth of the maritime industry for ocean-going ships across the globe, and is now becoming increasingly relevant in any nation's coastal and national waterways. They provide valuable services to ship owners and operators, supporting the smooth functioning of their operations by covering matters relating to crew safety, cargo carriage and safety, risk management, claims mitigation, publishing loss prevention initiatives where members are provided guidance and resources to help minimize risk and promote safe operations and comply with maritime regulations. This is in addition to the traditional claims handling expertise that might be expected from an insurance service provider. Their global network and support systems provide the members access to resources and support across various international jurisdictions, ensuring compliance with local and international regulations. This is therefore a very valuable aid that goes a long way in providing financial stability and security when faced with maritime incidents that may otherwise prove financially catastrophic to ship owners. It is rightly said that the roles extend beyond insurance provision, acting as guardians of risk management and contribute to the overall stability, sustainability of the maritime sector. Indian ship owners that trade their ships across international waters have benefited tremendously. So have Indian cargo interest when they have chartered ships and availed of charterers' liability cover, which is another kind of additional insurance provided by many P&A clubs. So those are my opening comments in as far as introducing this topic is concerned. I would like to take you through the history of P&I clubs, history of the P&I cover, the historical background. It's important because you know where this particular product is actually coming from and probably the direction it can go to if you understand history. Maritime adventures carry a disproportionate risk due to the uncertainties of the oceans, and merchants always felt the need for protection against the perils that they might face on the seas. The history of protecting societies, the forerunners to the P&I cover, has its root in marine insurance and dates back to ancient Phoenicians, Babylonians, and probably Indians. It was called bottomry, a system of merchant insurance in which a ship is used as security against a loan to finance a voyage. The lender would lose their money if the ship sinks. So that is a very rudimentary form of insurance. The actual concept of marine insurance as a protection against loss by maritime perils has been traced back to 215 BC, when the Roman government was required by the suppliers of military stores to accept, open quotes, all risk of loss arising from the attack of enemies or from storms to the supplies which they placed on the ships. Even as far as 50 BC, certain essential elements of modern marine insurance were already present. And these are insurable interest, assumption of risk by someone other than the owner of the maritime property, and payment of a premium as a consideration for the indemnities that were offered. The oldest insurance policy that is still traceable is 23rd October 1347, which insured the vessel called the Santa Clara from Genova to Majorca, and it is incidentally in the Italian language. So the way it was written is policies were signed by individuals, either alone or in a group. They wrote their name and the amount of risk they were willing to undertake, and they signed it. That's where the term underwriter came from. So marine insurance developed in Italy, Lombardy, and also in Germany, in the Hanseatic towns over there. But it was the English who got dominance. Nevertheless, the first English statute relating to marine insurance was an act touching policies of assurance used among merchants drafted in 1601 by Sir Francis Bacon, based on the insurance wording created by the Hanseatic League. So that's the connection. You all know the story that the London market for insurance actually came in through the London coffee houses. A very simple formula was used by Edward Lloyd. We all know about it. All that he did was he provided paper, pen, and ink and got shipping information from different places near the wharf and obtained by the runners. In 1696, he began publishing a news sheet called the Lloyd's News as a forerunner of the Lloyd's List in 1734, which came in actually after the death of Edward Lloyd. The first major insurance companies were established in early 1700s as a result of the bursting of the infamous South Seas bubble. I don't want to get into this. You can do a little bit of reading. It's just like a stock market scam. It was a company that was floated with a lot of promise that you can make a lot of money, but it never happened. And a lot of people lost a huge amount of money in it, resulting the government stepping in, just like what happens in our country. And what happened there was that the British government came up with an act to restrain the extravagant and unwarrantable practice of raising money by voluntary subscription for carrying on projects dangerous to the trade and subjects of the kingdom. That was the name of the act, very long one. As a consequence of this, a company without a charter was deemed to be illegal. And that act also made provisions for two insurance companies who were told that they had the right to underwrite business. As we know, Lloyd's was already practicing, so they protested. They had individual underwriters writing the business. They said, okay, fine, Lloyd's underwriters can continue to do the work, but companies, these are the two companies that will have to do it. But what really happened at that time was, the companies were able to underwrite only 4% of the total tonnage. That's abysmally low. And the rest of it was continued to be written by the Lloyd's underwriters. So there was this fear that probably a large number of individual underwriters are writing such a lot of tonnage. So you need to expand those two companies, and there should be more companies coming in to do this kind of. I'm saying all this because we need to figure out how the thinking goes and what makes how have we arrived at the situation. So mutual and hull clubs started coming up, companies, and mutual clubs, as we know, they had a joint ownership. But one observation that came up at that time was that Lloyd's underwriters were able to give better rates. And the reason for that was the mutual clubs were taking tonnage from multiple sources, and not all the tonnage was good tonnage. And therefore, those tonnages had claims. The cost started going up for the insurance. Whereas Lloyd's underwriters, they were picking and choosing that tonnage, and they were able to offer better rates. This is something which is very important. And this is an early takeaway that I want you to keep in your mind, that substandard tonnage can adversely affect insurance cost for owners who take care to maintain their ships and affect the benefits of mutual pooling. So if you have a mutual pool, you've got people who are doing good with their ships, but people who are not doing so good with their ships, you're going to have a cost on that mutual. In 1836, there was the English case of Devor versus Salvador. It was very important in P&I history. It held that damage caused to another vessel in a collision was not recoverable under the standard policy of marine insurance in use in London. So there was a collision and you couldn't recover the cost. So the response of the market was to extend cover for 3/4 of any such third-party damage. And the ship owner was still exposed to 1/4 of the damage. Now, that was probably with the intention that the ship owner should also be careful in avoiding collisions. That could have been the logic. In 1846, the British Parliament passed the Fatal Accident Act. I think we got a Fatal Accident Act in India also, which gave an important new right to the dependents of persons who lost their lives as a result of the wrongful acts of others. So this had liability implications for ship owners carrying large number of immigrants at that time. In 1854, the first British Merchant Shipping Act was passed, which extended ship owners' right to limit death and personal injury claims if ship owners are not at fault. As I told you, shipping is a risky business. You can have liabilities that are huge, but you need to limit this liability. So the act came up and said that we will limit death and personal injury claims if the ship owner is not at fault. However, there was a problem. The calculation of limitation was based with reference to the value of the ship and freight. So this meant that a ship owner could potentially be exposed to value more than that of the ship. If your ship costs $5 million, you could potentially have a $7 million liability. So there was excess that was uncovered. In 1855, this concern resulted in the forming of the first mutual protection club, which is now called the Britannia Steamship Insurance Association Limited. In common with other protection societies that were established, the original rules of the society covered only liability in respect of death and personal injury, 1/4 collision liability not covered by the hull insurers, and for the excess collision liability, that is liability for collision claims in excess of the sums insured in the hull policy. So we are still at a state where we are still with the mutual protection club. The mutual clubs were simply described as protecting societies. This is important. And the class of risk to which the term indemnity would apply was not developed at that time. In 1870, the sinking of the Western Hope brought a change. Now, this ship was en route to Cape Town with a cargo and diverted to Port Elizabeth for some additional cargo. The vessel was lost when en route to Cape Town. The court held that deviation to Port Elizabeth prevented the ship owners from relying on their exclusion clauses, and they were therefore liable for the loss of cargo. So you had a merchant who took cargo insurance, but now here the law says that, guys, sorry, the ship is responsible for the cargo. So the new thing. So the ship owners till that time relied on an exclusion clause. They said that, look, we're carrying a cargo lost or not, we don't care. If you get a cargo, good enough. If due to a mistake we lose cargo, bad luck to you. But now that exception clause was gone, and the case showed clearly that this form of defense was not infallible. And therefore, the first indemnity club was formed. So that's how we get protection and indemnity. So it is an indemnity claim that the cargo interest might bring, and you are just kind of supporting it, you're paying off that claim. In 1893, due to the US Charter Act, the right of ship owners to rely on exclusion clauses in their bills of lading became restricted, and they were required to exercise due diligence to make their ships seaworthy. This is an important development. Till that time, seaworthiness was not a problem, but now your ships had to be seaworthy. The Hague Rules, adopted in 1924, extended these principles across the world, and the P&I clubs, therefore, also began to offer defense cover, since there was need to provide ship owners not only with insurance for legal costs, but also to provide advisory and claims handling services for P&I and many non-P&I matters. This is how it started developing. One important aspect when we think about P&I clubs that comes to our mind is it is international. We can call it whatever name we want to, but a protection and indemnity club on a global scale is international. The P&I clubs those days evolved around the same time in UK as well as in Scandinavia. And I was just looking at reading up some stuff. Very interesting to note that GUARD, which is today one of the largest clubs, way back several years ago, this is the old statistics of 2001, they had an entered tonnage those days of 94 million GT, of which 32% was Norwegian, 28 other European, 19% American, and 21% Asian. So completely mixed ownership with the Scandinavian club. So as time went by, we saw that these clubs tried to come together. Scandinavian clubs tried to pool together with the British clubs. And GUARD initially, I think I read somewhere that they had a reinsurance arrangement with the UK P&I. So imagine today the largest club, they started off as a reinsurance arrangement with another club. The interim arrangement worked very well for them, and this is a model which has continued. The Japan P&I, which launched in 1950, became part of the IG group, the international group, in the year 1976. The American club, from that website I saw that established in the year 1917, became part of the IG in 1989. The IG group today covers 90% of the world's requirement for P&I insurance. But there are several other mutuals, like China P&I, launched in 1984, that have significant membership and who still have reinsurance arrangements with individual members of the IG group clubs. Maybe one or more. This looks like another successful model when you consider the diverse membership of clubs from various parts of the world. Protection and indemnity clubs are connected to international law. As I mentioned, marine insurance, you can divide it broadly into two main categories. First main category, cargo that's carried by sea, and the second relating to the ship itself. So P&I insurance covers liabilities arising out of the operations of an ocean-going ship that may be trading worldwide. The P&I insured is exposed to liabilities and losses arising out of many different incidents and subject to a wide range of different jurisdictions and rules of law. Since marine insurance is closely connected to international maritime law, it follows that solid knowledge about foreign legal regimes and international rules and conventions governing the ship owner's liability, as well as knowledge of management and operations of the ship in general, is of crucial importance for the insurer's risk assessment, claims management, and claim settlement. Maritime law historically is seen as reacting to shipping disasters. And we all have seen the movie Titanic. The Titanic disaster led directly to the development of the SOLAS Convention, Safety of Life at Seas, and there have been several such developments. The International Convention on Civil Liability for Oil Pollution Damage 1969 resulted directly out of the grounding of the Torrey Canyon near the UK coast in March 1967. Even organizations like the IPOPF came in as a response to that. Sorry, I should have shown you this one. Yeah. The other important aspect that we need to note is the top four marine insurance markets are based in UK, Japan, France, and Scandinavia. So marine insurance therefore has fairly standard terms because this is focused in a particular area. And that's in a way good because internationally then you know, generally everybody knows what the laws are and what are the laws that you need to pay attention to. Under English law, we got the Marine Insurance Act, and in India, we got the Indian Marine Insurance Act 1963, more or less similar. I now come to the evolution of the present day P&I cover. Since the marine insurance industry is international in scope and most of the interested parties operating on a global basis, products offered are quite similar, and competition mainly focuses on the premium price and service. So premium price and service is extremely important. The P&I insurance has therefore developed over the last 150 years in response to the need by ship owner for insurance cover for third-party liability that were not recoverable under the standard hull and machinery policy. Originally, it was meant to protect ship owners from liability in respect of personal injury and death, and the one-fourth collision liability that was not covered by the hull and machinery, and excess collision liability. But now the standard modern P&I policy has an increased range of liability and losses, and ship owners can now have the benefit of including liability arising from wide incidents like carriage of cargo, pollution liability, liability for loss of life, injury to crew members, passengers, and others such as liability for damage to fixed or floating objects. The clubs also offer standard additional covers like defense cover, and very few clubs also offer war risk insurance. The underwriters offer that very, very selectively. Let's look at this a little bit more in details. The P&I insurance cover the liabilities that are covered. So you have liability arising from carriage of cargo, pollution liability, liability for death or injury to crew members, passengers, and others such as stevedores on board the ships, damage to fixed and floating objects and to other property, such part of the liability for collision damage that is not covered under the ship's hull policy, excess liability arising out of a collision, wreck removal. The club may also cover certain other losses costs and expenses In addition to that, arising out of members' liability to a third party, like losses affecting the operations of a ship. For example, diversion expense, expenses incurred in dealing with stowaways and refugees, costs and expenses of wreck removal, irrecoverable general average expenditure, the cost of measures taken to avert or minimize loss, and disinfection and quarantine expenses. The P&I cover is limited to named liabilities and losses and expenses that are incurred in direct connection with the operation of an entered ship. This is very important. The incident must result from the operation of the ship and not from any other cause. It is to be noted that the club provides no cover for liability resulting from terms of the contract prohibited by the club or arising where a member has omitted to use contracted terms that are required. Very important point here. The mutual clubs aim to provide cover at cost. And one of the defining characters of a mutual club is its non-profit nature. It is not run for profit, but for the benefit of its members who are both the owners of the capital and the customers of the club. P&I clubs levy a supplementary call if the initial advance calls or estimated total calls are not enough to cover the actual cost during a policy year. These calls replenish the club's funds to meet its liabilities and are levied on members based on their net estimated total calls for that year. The terms and conditions of the contract between the members and the association is evidenced by the certificate of entry. The port state authorities everywhere, including in India, are therefore very vigilant to ensure that the COEs are valid for vessels that enter into their territorial waters. A quick look at how it is. The simplest I could get was from Japan P&I. Doesn't require much of an explanation. It's there. Each club retains $10 million. They have a pool layer of $100 million. Over that, they have a $2 billion general excess loss cover, which they buy from the market. These numbers look very impressive. But consider one thing. In India, we now have a situation wherein there's a claim of $1 billion. So these numbers are not really that large. You need this kind of numbers. Fixed premium insurance. While the bulk of shipping liability cover is underwritten by mutual clubs, the fixed premium underwriters that focus on small and medium ships, including those operating in the offshore sectors, have become quite visible. These insurers provide comprehensive cover against P&I risk for a fixed price, but without the need for the high limits of cover provided by mutual insurers. The facility typically offers lower limits compared to mutual insurance, often up to $500 million US. Though some providers may even offer cover up to $1 billion. Many of the fixed premium providers are backed by good financial security, and this mode of P&I cover is now offered also by several IG group clubs as well. The point to note is that fixed premium insurers do have a profit motive. This is a very important aspect of P&I, is the pay to be paid rule. The contract between a member and the P&I club is one of indemnity. That's one of the early observations that we had. The member is only entitled to be indemnified by the club after he has discharged his liability to the third-party claimant, unless the club decides otherwise. Any order of the court or a settlement must be final before the club will pay the members. So that's something which we need to keep in mind. This is known as the pay to be paid rule. But there are some exceptions under some laws where a third party may claim directly from the insurer if the insurer is insolvent. And one of those things is the Maritime Labor Convention. It's an exception to the pay to be paid rules. Under the MLC rules, if a ship owner fails to pay a seafarer's wages or other compensation for personal injury, illness, or death, the ship's P&I club may be required to pay directly to the seafarer. You also have a similar provision for pollution, and there's a direct liability for P&I club for pollution under the CLC 1969 as amended after that. Entry criteria for vessels. Typically, ship owner, since P&I cover relates to claims arising out of operations or management of the ship, the insurer will consider several factors like the type of vessels, is it a barge, fishing vessel, cargo, type of operations, the age of the vessel, its claim records, experience in operations, in addition to the extent of cover required. The P&I cover often mandates condition surveys, and insurers prefer ships with certain common standards since seaworthiness of vessels are of paramount importance. So that's the reason why condition surveys are required. I know that I've been hurrying this up a little bit, but the topic is so vast that if I don't hurry up, you're not going to finish it. Okay. I just want to talk about the ecosystem, a desirable ecosystem for a P&I club. P&I insurance is highly specialized, requiring knowledge of ship operations and management and the applicable legal regimes. Ideally, it requires a special ecosystem to thrive. Limitation of contractual exclusions due to international conventions have foisted a host of liability that ship owners are exposed to, from cargo interests to government custodians like customs and also ports. Detention of ships is a huge commercial cost, and delays can be mitigated on provision of security that is satisfactory to the claimant. The clubs and the members are concerned often about progress in a irresponsive banking system or alternative security systems, quick dispute resolution mechanisms that have finality, which is still missing in several jurisdictions, access to specialized advice relating to maritime disasters, and an ability to respond promptly to ship owners in distress. So there are a few incidents which I put in together. How many minutes do we have, sir?
Yeah, so you can cover first.
No, we got like 10 minutes.
Yeah, we have time, but I think history took a lot of time, so you can focus on the...
But history is essential because all the observations come from history. We always want a shortcut, and then we end up doing postmortems instead of premortems. Okay. Just to mention very quickly, this was early days when I joined James Mackintosh. I joined the company in 1994. 1995, we had a vessel called the Captain Could, which was, I don't know whether Mr. Raman remembers it. It was a Ukrainian vessel, and beautiful, lovely vessel. She came in, and after she came in, we got VSNL yelling that there was no communication in Bombay because the fax lines and the telephone lines internationally was just disrupted. So what had happened was that this vessel had actually dragged anchor and broken communication cables which were several feet underneath. And it just hit me at how powerful P&I can be. And what happened was this was owned by the Black Sea Shipping Company, Odessa at that time, entered with a Russian insurer those days, but it had to go through a whole process of arrest in order to satisfy demands for security. It was a government-owned ship, so there was consideration, cash deposit of 10 crores, undertaking by the Ukrainian government in the amount of 43 crores. I'm not sure how it ended, but the security never came. And I suspect the last I knew was the ship was up for sale. What finally happened to it, I don't know. The point is, this is a business that requires money. The business that requires ability to put in security. Second example that I want to bring up is the Wilma. This also happened in the year 1995, represented by first-class agents in Bombay. Forbes, our common place where we worked at Falk. And what happened was gold was discovered on a third party who had boarded the ship and come off. There was rummaging on board the ship, and they actually found a limited amount of gold. Later on, the ship staff themselves found a lot more gold, and the ship was detained by the customs. This is not the courts. Ruling was made, order was passed, and it was said that the ship can sail upon furnishing a bank guarantee. Very good. Those days, bank guarantees could only be furnished by public sector undertakings, like the State Bank of India. And the State Bank of India, after the ship was released, the ship was out at anchorage, and the poor agent would make visits to our office every day, saying, "Sir, where's the bank guarantee?" We have done everything. A first-class bank in London, Barclays, has actually given 100% backup. Bank guarantee isn't coming. So it went on a week, 10 days. So those days I was 27 years old. The person whom I was reporting to was 63 years old. So we decided to take a risk. And we called up the office of Shri Manmohan Singh, who was, I think, then the secretary at the secretary level. And we found his colleague who told us what to do. We did that. Next day morning, we got the bank guarantee. Point is, it took 2 weeks. This is something which is very, very important. The point is, things have not changed much. I found another bank at that time, Bank of Baroda, who was willing to do it in 3 days. But today we are back to a situation wherein a guarantee takes 2 weeks. And look at the cost if a ship has to stay back. The third incident that I want to talk about is this vessel. Now, any of you master mariners over here, other than captain here, I think is very experienced. Yes. Can you guess which is the coast? Huh? Who said that? Vizag. One more guess? No. This is Ratnagiri. Okay, this is Ratnagiri. This was a LPG gas carrier, the Q Bridge, which brought in butane gas. And we had a surveyor actually on the ground. The monsoon was just over, port had opened up, one ship had berthed and gone off, and the Q Bridge came in, and she hit bottom. It became a major incident. So she ran aground at the Finalex jetty after pilots boarded. 2 tugs were in attendance, but still she boarded. There was an immediate response. Our surveyors, coast guards, mid-salvers, all of this happened within the next 2-3 days. Priority meetings by authorities, all stakeholders, port, MMD, police, customs, salvers, P&I underwriters, owners rep, terminal operators, and the emphasis was on prioritizing life and environment over commercial concerns. Regular daily coordination meetings were held. It was decided to lighter 2,400 metric tons of cargo, and a vessel was chartered called the Relgas Nayantra. The first ship-to-ship lightering was done, 703 metric tons. And then we realized that the Nayantra could not berth because of LOA restrictions. So there had to be a double banking. And the ship had to come in, and the cargo from the Nayantra had to go into that ship before it could be delivered. She was finally refloated on the 9th of October, anchored at outer roads on 10th of October, rebirthed at 16th October, departed for dry docks on 5th November, all during the same period. A receiver arrested the vessel, demanded security, substantial bank guarantees were posted. A knowledgeable maritime judge actually vacated the arrest, and security was released. That decision was appealed. 20 years later, even now, there is no finality. Now, whenever I go abroad, when I meet my principals, they always say, George, how's the legal system? I have no answer. We need finality because this is an unsettled claim that is on the member's record. And unless it's finalized, I mean, it's going to carry on as a mark. I think that I'll skip the Baltic Conference. The Enrica Lexi, of course, we all know that had criminal and other liability complexities, which the guards shot at a fisherman's craft, mistaking them for pirates. These are all incidents which I was involved on. I made 12 trips to Kerala those days. And basically, we were fortunate because the guards were Italian military. And the Italian government was willing to fight for that. So our only job was to get the ship free, which we managed to do. But this is just to highlight that how complex P&I involvement can be. Come to the conclusion. The P&I facility provided by international insurers are of a huge benefit to the ship owners. They are a repository of knowledge and other resources that help in keeping the ship owners and their operations from getting bogged down when braced by unforeseen calamities or events. They utilize services of highly trained in-house claims handlers. We're talking about opportunities. We need claim handlers, and we need people who will come in and stay with us long term. External experts like correspondents, surveyors, and lawyers. They are like a 24/7 manned helpline that can be depended on for assistance, irrespective of where the ownerships are lying. They help in actively mitigating claims and reducing costs and exposures. Now, the risks are quite similar for domestic tonnage, frequenting inland waters and on the coast, although on a smaller level. The sizable investment in terms of finance and experienced personnel is justified in terms of the excellent support that owners can expect to receive, presupposing sufficient tonnage. In this context, I want to make a mention. Way back in the year 2006, one of the private insurers in India, IFCO Tokyo, launched an excellent product. It was titled Marine Hull Liability Insurance into bracket P&I Policy into bracket Inland Coastal Vessel. That's how it's titled. I say it was a very good product because I was asked to introduce a product in Goa. And I am always grateful to my mentor, the erstwhile chairman of James McIntosh, Mr. Homi Commissariat, who graciously insisted that I take my wife also to Goa while this product was being introduced. So it was a very comprehensive product covering everything that a modern P&I club would give, including pollution. That product, I understand, was discontinued in 2021-22. I haven't gone into the details of that, but probably if you look at it, it could only be on how little profit or how much losses. I suspect it is the latter. So I remember coming to Delhi a few years ago. I was telling Mr. Raman maybe 8 or 9 years ago, chasing up IFCO for my bills because our bills were not getting paid. But those initial days, we were very actively involved in supporting them in claims. But later on, I think they changed strategy. I don't know what they did, but this is what I hear. In summary, the P&I industry is supported by people who understand vessel operations, have a very good understanding of international laws, domestic laws, and practice, and those who can provide prompt and effective services. The scope of involvement includes proactive advice on vessels, impending calls to worldwide ports, advice on all kinds of cargo handling and safety, including protective surveys, matters relating to safe ports, matters relating to crew safety, emergency medical repatriation, monitoring medical prognosis, helping owners handling mortal remains, settling death compensation. This is big time work which we do. A 24/7 alertness and responsiveness by insurers in responding to distress calls and continual advice on evolving situations at various ports of call of their insured ships is the way in which P&I claims are largely mitigated and prevented. The P&I segment of marine insurance is a definite value added proposition that is very helpful for the growth of the maritime industry. In my opinion, it requires thoughtful planning, long-term commitment to the sustainability of the service. Thank you very much for your attention.
Mr. George Jacob, you covered much in detail with the history, also the imperatives, and you gave a wonderful overview of the global benchmarking and the globally how it came up. So we have with us chairing this session the very person who was instrumental in starting the first fixed premium PNI product in India from New India Assurance when he was heading the Marine Department. So, Mr. Sanjeev Singh, I would like your comments and conclusion for what is the strategic blueprint for India and how would you recommend things and the setting up of the ecosystem?
I thought that was a question which I was to answer sitting there. So anyway, I mean, I can also share a few thoughts being from the industry, insurance industry. And I must thank George for making such an excellent technical presentation on P&I. Many of you who may not be from the insurance background or shipping background may have found a few things difficult to understand. But broadly, P&I insurance is nothing but the insured and insurer are same people. I mean, a bunch of ship owners collect together, they form a pool, and out of which they pay the claims. So it's a हमारा इंश्योरेंस हमारे लिए, so हम ही उसको contribute करते हैं और हम ही उससे benefit लेते हैं. So clubs are basically like that. So, but it's one of the most internationalized line of business in the world, like aviation. It touches all international rules, maritime laws, conventions, and therefore anybody who thinks of starting a P&I product needs to be very proficient in maritime law and conventions. So I'm sure a lot of things have been absorbed, the technical things have been absorbed through George's presentation, and I must thank him for making my task easier. I will focus only on what has happened in the Indian market about P&I. Where is India in the global P&I? You know, the P&I is, insurance is something which is dominated primarily by Europe. I mean, out of Europe and America, in Asia, there is one IG club, that is Japan. There is no other IG club. So primarily it's a Europe-centric, London-centric arrangement, P&I insurance. And India is nowhere compared to that. So there are other countries which have started P&I, like Turkey has its own P&I, China has its own P&I, Korea also has its own P&I. But basically these P&I are meant for catering to their local needs. Like China basically caters to their Chinese interest. India, if he wants to go to Chinese club, probably they will not get any insurance. So point here is, why a sudden interest? Shipping ministry, finance ministry, everybody is now asking insurance industry and the stakeholders to set up an Indian P&I. So there are two things. One is aspirational. As a great nation, big nation, having 7,500 kilometers of coastline, and with ancient and medieval trading in East and Far East and West, why we could not develop such institutions? So these are the things which have gained prominence basically because of the sanctions, tariffs, warlike situations. So where so many restrictions are put on Indian vessels that you find you have nowhere to go. If you have to carry Russian crude, you have no P&I cover because European sanctions are there, US sanctions are there. So therefore it was said that there has to be a push for P&I, Indian P&I, so that Indian interests are adequately covered. Now point is, how? Do we have the critical mass? Do we have the resources? Do we have the capacity? Do we have the expertise? and experience. So that is where we lack. Possibly, we never thought that P&I could assume so much of importance in the last few years. I worked in New India as Marine head for a long time, and I have been associated with so many P&I initiatives that I had also thought that we can give up the hope of setting up Indian P&I. In 2012, I was part of the discussion group with GICRE when INSA and other stakeholders came together to cover for the Iranian oil. $50 million capacity was formed, and it was made available. 50 million, as George knows, is peanuts for P&I cover. But it was said something better than nothing. So let's have this 50 million capacity. Only one vessel was insured, and that too got into trouble. The insurer's bank account was frozen by the European bank in a foreign country, just because the news of the covering sanctioned Iranian oil got into media. So this is where the geopolitical situations can hamper your activities, can propel you to more action, do the rethinking, and strategize how to go about this P&I. So again, in 2018, I was the head of Marine, and we launched a product of fixed premium P&I. The fixed premium P&I was launched by DG Shipping in the office of Shipping Corporation of India, Bombay. That was the month of May 2018, and there was a lot of publicity of Indian P&I being available for Indian interest. So it was basically meant for coastal vessels, because the kind of cover, $1 billion cover required, was not available. As per the Merchant Shipping Act, you don't need for coastal vessels the kind of tonnage you have, up to 10,000 gross tonnage. You don't need that kind of cover, 1 billion cover. And as per Merchant Shipping Act limitations, possibly 15 million will do. So that is why the 15 million cover was offered. GIC and New India got together. One reinsurer was also there, and some club was also involved. And it went on for some time. Some policies were issued. I don't have the data right now, but it has been found to be fairly profitable in last 5 years. Not many claims in the coastal vessels. Of course, there may be some crew claims, but they were not of such a high magnitude. So it was a good proposal to be continued. But somehow the ship owners did not take this idea very enthusiastically. They wanted the P&I facility for their all ships on all or none basis. They said, do you have a $1 billion cover? They asked New India in writing, and New India said, no, we don't have $1 billion cover. We have only 15 million. So what do we do with the 15 million? It's nothing. I will go with my present club. तो इस तरह से ये चलता रहा काफ़ी दिन तक, और लोग न्यू इंडिया के पास stray ship owners, some of them with 1 or 2 tugs, or somebody will come and take the insurance policy. Still, the product is still on. I'm surprised this IFCO Tokyo cover you mentioned has been discontinued. But yes, they had a good cover. It was given with the hull policy, and that is where some kind of limitation was there, or maybe their treaty had a problem, so they could not carry on with the full-fledged P&I cover. So they also had some kind of restriction in that, and that is why that cover was not very popular. Although it was one of the prime, early movers. IFCO Tokyo was early movers in P&I, but it did not take off in. That kind of cover also did not take off. So the point here is, today also we do not have much to do. We do not have the $1 billion cover, and the current thinking is, let us start small. Let us start with a P&I club, Indian P&I club, which can have a fixed premium and which can cover at least coastal and inland vessels. That will give us some expertise, some experience, some data to build up or scale up later on. So, post 2022, after the sanctions, Ukraine sanctions, this initiative has gained momentum. The finance minister also repeated many times. And in 2023 from Indian Maritime Conference, she said that we are going to set up Indian P&I. After that, there were so many meetings. I was also part of many meetings. I was also part of interaction with the finance ministry, Mr. Sanjay Malhotra, DFS, and Mr. Vivek Joshi, DFS. They all were involved. But somehow or the other, the kind of critical mass with pooling oil companies together, all the four insurance PSUs together, GIC Re, and possibly, it was said, possibly the government will also contribute something. It did not happen, and things remained stuck at that level. Now today, not a few days back, we have come to know that a consultant has been appointed by DG Shipping to conduct a feasibility study. So at least now the stage has been reached where all the stakeholders are now going to contribute to that feasibility study, and DG Shipping is going to take up very seriously how to set up this P&I, Indian P&I. Well, what are the challenges? Again, coming back to that, the Indian P&I has a limitation in terms of legislation. You don't have the mutual insurance facility right now in the Insurance Act. I'm not sure with the latest amendment, I think 5 bills were lined up for shipping and insurance. Insurance possibly is not coming up in this session, but COXA and merchant shipping bill has been passed. So it's a matter of time that Insurance Act may be amended and some mutual insurance may be allowed, and along with mutual insurance maybe MGA will also be allowed. So all these are the vehicles through which a fixed premium P&I club can be formed and propagated for Indian stakeholders, Indian ship owners. The other issues are, as I said, most of the ship owners, they lack confidence. He says 24/7 service. I mean, James McIntosh is a big name amongst the all correspondents. India, I think, like IG Club handles 90%, you must be handling 90% of Indian, or maybe something similar to that. Okay, so my point is, like P&I Club cannot be everywhere, so they put correspondents everywhere and 24/7. So the correspondent's job is very, very important job, and that is why I think we are lucky to have him here to discuss about these things. Expertise is something which will not come unless you practice, unless you start somewhere. So the point is that when the guy goes for a job, he's asked about his experience, and unless he gets a job, where does he find experience? Somewhere he has to start. So this is where possibly you can start with a fixed premium P&I, and then slowly you scale it up to become a full-fledged Indian P&I. I mean, it's going to be long journey. You need very deep pockets. You need a lot of expertise and such a specialty business which not many people are interested. I can tell you, even in insurance company, hardly many people will be attracted to P&I insurance because they don't see anything happening in the country. But as I say, it takes a long time. So I'll give you example of IRS, Indian Register of Shipping, IR class, which was set up in 1975. And there was one person who was highly motivated that whatever shipping registers, international shipping registers are there, I will set up something similar or maybe better than them. I will be setting up something which is at least on par with the international stature. So he worked for that. I think Captain Kharbanda knows him. Captain J.C. Anand. He became first chairman of IR class, and he is still alive today. He is 103-year-old, and he is still working for P&I. Can I tell you, when the IMU called for a session on this P&I, Indian Maritime University, Chennai, then Dr. What was his name? The earlier DG Shipping, Malini Shankar. She invited him, and he spoke. 103-year-old man is speaking still about the P&I. He's very, very passionate and enthusiastic. So once we have these kind of people to drive it, it's possible. It took IRS about 35 years to become a world-class classification society. Indian Register of Shipping is one of the 12 world-class IX class classification societies today. So maybe someday we will also become IG club. But right now, let us start somewhere. So this is where the things have reached, and I'm not very sure how it will pan out in the coming months or years with the consultant now appointed. I hope things will speed up. So the consultative committee should be there. It should have INSA compulsorily. Ship owners' interest is paramount, and they should have it. And then the lawyers, DG Shipping, Ministry of Shipping, and Finance, all these people have to come together to find out how to start it. Indian P&I is already there. Let us admit this. P&I cover is available. If somebody wants, some ship owner wants, coastal vessel owner wants, he can have a policy. So Indian P&I is there. The only issue is to scale it up. Are 1,034 coastal vessels taking Indian P&I? No. They are plying in Indian coastal waters, but not all of them are taking. Maybe 10, 15 or 20 or maybe maximum 100 is taking Indian P&I, not more than that. So similarly, there are inland vessels, they have a limit of passenger limit or crew limit of 10 lakhs per head. So are they taking P&I cover? No. So it has to be made mandatory. Once you make mandatory, then only possibly you can think of a takeoff stage. Mandatory, this was done by Japan. In 1950, it was made mandatory to buy P&I only in Japan. So like we also have admitted insurance, हमारे यहाँ कोई insurance आप बाहर से नहीं ले सकते. For P&I also, a special exemption is granted by IRDA to ship owners to buy it from abroad. So once you have it, and once you make it compulsory, like you have made it compulsory for Indian flag vessels, Indian vessels with Indian flags, same way you have to make it mandatory for Indian coastal vessels to be given Indian P&I. So that will possibly create a critical mass good enough for your experience, for getting some technical know-how. You will have to sign MOUs with IG clubs. You will have to maybe hire Mr. James McIntosh to give you some practical inputs. To train people, you can always send people abroad with IG clubs to train them. The insurance companies have those kind of funds. And I'm aware that when we were young officers, people used to be sent to Munich Re or Swiss Re for months for training on a specialized insurances. So the same thing can be done. You need to be collaborative. You need to engage with IG clubs, and that is where you have to develop your Indian P&I. It can be done. It will be done. Only issue is how much time. So in a very conservative estimate, it can be considered that maybe 3 years or 5 years of the experience with the smaller vessels will be good enough. By that time, possibly the kind of investment that is going on in the shipping, India can buy more ships. Right now you have hardly 400 ocean going vessels. You may have 1,000 ocean going vessels. You may have so many other type of vessels. And that is how it can develop a kind of feasibility, financial feasibility and capacity, where you can have Indian P&I, and maybe all the Indian ship owners will come to you to have this. Then any P&I will only need a first layer of $10 million. Over and above of that, you can buy reinsurance from anywhere. So that is how I think we have to start. We have to start small and we have to scale it up. It may take some time, but like Indian Register of Shipping, it will also take off. Take it from me, I am speaking from a public forum. Indian P&I will come. It will not be decades. It will be within next few years. So thank you very much, and questions are welcome.
Thank you, Mr. Sanjeev Singh. Wonderfully covered all the topics. You mentioned that Indian P&I is already there. You are there. You are the one who launched that product, and India has, of course, in a growth path. We are going to be amongst the top 10 nations, shipbuilding nations, as conceived by 2030, and then amongst top 5 by 2047, and more than that, leasing and financing, increasing India's tonnage is already there. The other initiatives by the government, So there is a brighter side to it, and I'm sure with experts like you, we will reach the goal very soon. So any questions from anybody? Yeah.
Thank you, sir. Just introduce myself. I'm Captain Saujanya Sinha, and I'm a director with Applied Research International. So, whatever, firstly, my compliments to you, sir, Mr. Jacob and Mr. Sanjeev Singh, for wonderful sharing of your knowledge. And I really appreciate it. And I like to, from my heart, that I really gain some knowledge because I'm very familiar with this. I teach marine insurance, liability insurance, P&I club to the seafarers appearing for their captain's exam. So my question, or rather clarification for Mr. Sanjeev Singh is, with reference to the India P&I club, now the basics that we know that the club, it's a mutual club formed by the ship owners who are members. And after that, each membership owner enters his ship into the club, and the premium that is paid is dependent on various parameters, one of them being the gross tonnage. That is where the money is coming. My question is that where does an insurance company gets associated with P&I Club for providing a financial support when the money is actually being collected by the ship owners? So my question is it that the P&I Club in the case of India, in a way reinsuring with New India Insurance or something like that, because the focus should be on INSA, the Indian National Ship Owner, that you guys come and become members, contribute, create the financial foundation and give it a start. Yeah. So, yeah.
Sorry, you complete.
No, I'm through. I just wanted that clarification, sir. Thank you.
It's working. Sorry, I didn't get your name. Captain Saujanya Sinha. So, nobody better to understand from your point of view. You are captain. You are well versed with the maritime issues. My simple why insurance company you asking when it's a mutual? Yes, yes. I will tell you. INSA was part of even the first initiative in 2012 to set up a mutual P&I. And INSA came to GIC Re and other public insurance companies saying that we don't have the money. We don't have the money, you provide us cover. Or government provides a sovereign guarantee. Otherwise, our P&I cover will be off if we take Iranian crude. So they simply wash their hands off at that time. And secondly, mutual can be formed if there is a good enough fleet. Right now, we have a very, very small fleet, and that is where the scale of economies doesn't work. And therefore, even the Maritime Protection Indemnity Association, which was set up by Captain J.C. Anand in 2016, came to GIC and New India saying that you provide a fixed premium cover. Like it is provided by Turkish P&I and everywhere. So you provide a fixed premium cover. We will provide you all the support as well as management of that. So they wanted to be manager, but the provider of insurance was to be New India. So that is where it started. And even if a ship owner's point of view, if you say New India or GI series at the back of an insurance arrangement, possibly they will accept it easily compared to any other situation, unless they are forming a mutual and they do it. So mutual right now is out of question because of legislation. So once it comes, possibly there can be some progress. But right now, only insurance company can provide fixed premium P&I.
That was a very valid point. You said that the mutual system is, unlikely to work because of lack of the fleet.
Yes,
the
yes.
Lack of fleet, it directly relates to the lack of contributions.
Yes,
to the
yes.
club.
Absolutely.
So thank you very much. Thank you very much.
I am Gurinder Dua. So my question essentially is around while we are thinking of forming these PI clubs, so is there any consideration of using technologies like AI, for instance, for better risk assessment and learning from all the existing knowledge which is there, uh, documenting it and using the technology there, and also using blockchain technology, for instance, for making the claims faster and more secure. Uh, so, any thought on using these new emerging technologies to our benefit? We are starting afresh, so.
I think your question.
I think AI is going to be very disruptive. So you're probably right. At some point, you're going to get AI involved. Uh, but as I said, one of the main things about PNI is very hands-on operations involvement. Hands-on meaning you get a ship coming into port. You see, for example, the contamination in cargo. You are actually involved in the operations straight away. It's not something which you stand back and allow it